90 people waiting, so we can start.
Dun,
Sure.
dun, 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 dun. Welcome to Shitcoin Talk episode 88, I think. 88. I'm dumb, and I've got a few guys here with me. Let's we got SBF Sam here. Sam, what's going on, dude?
Hey guys, not too much.
Yeah, go ahead and introduce yourself if people don't know who you are.
Yeah, I'm Sam. I started up Alameda Research, a crypto quant trading firm, and then after that, FTX, a global crypto derivatives exchange. Also been involved with Project Serum, a DeFi ecosystem built on Solana, FTX US, and a bunch of other random crap in crypto. So before this, I was trading ETFs on Wall Street for Jane Street Capital.
Whoa, cool.
Awesome.
That's awesome, man. Yeah, it was good to have you on.
Smarter than all of us.
Yeah, it's good to have you on Shitcoin Talk, man.
Yeah,
a lot
thanks
of
for
guys,
having me.
A lot of people have been asking about this, so it's finally happening, man. Then we got the other guys. I mean, so.
Whatever.
Yeah. We got Crypto Messiah. What's up, man?
What's up?
How are you?
I'm doing really, really well. I mean, the last couple of weeks have been pretty surreal. I mean, it's as somebody, I've been in crypto for 8 years now, and I haven't felt like I feel right now since, in a very, very long time. And this includes DeFi summer. So
Whoa.
I'm not 100% convinced yet that that we're about to have this like mega face melting, DeFi run where we see DeFi dominance run up to, I'm thinking 20% plus is a solid target for, a solid bubble. But
even 15% would be great.
It's at 4% right now, and right now I'm like at the phase where I'm really optimistic about this, but I'm also very cautious about it because I remember in 2017, and of course it was totally different. I feel like there was a much larger retail presence, but in 2017, like we all watched our portfolios, even if you were the worst fucking trader in the world, go 100x. And granted, I would imagine we all came into 2020 or 2021 with a lot fatter stacks than we had in 2017. So it's a little bit different game than it was back then, because liquidity is an issue now. But even then, it's a little surreal right now. So I'm really, really nervous, but at the same time, I'm really excited for what could be, and I'm not afraid to dream now.
Man.
So let's fucking go.
Let's fucking go, dude. Okay, I like that. That's great. Ambroid.
Hey, what's up?
Hello.
Ambroid here. I'm just a parasite who leeches off of the work like the people like Sam do, and and I'm critical of the garbage that's done in comparison. So that's me. I'm just being annoying as usual. That's me.
Great, dude. And I draw charts. Hello? You're muted. Oh, okay. He knows.
Hello. I draw charts rarely, and I post them even more rarely. And every once in a while, I make a little bit of money. So, but mostly people know me because I shit post all the time. So.
How did you get the name I draw charts if you don't draw charts?
He did.
Because I started off drawing charts and being like a super useful, friendly, helpful dude when I first joined Twitter, and then I just realized everybody's fucking stupid, and I hate most people. So now I'm just an asshole on Twitter, and
okay,
I'm just an asshole on Twitter, and I try to make myself laugh. It's like my creative outlet.
I would suggest changing your name to I Drew Charts.
Yeah.
No, it's my handle. It's a great handle.
I drew charts,
and I'm not giving it up. You can't have it.
I'm beyond to something there.
Yeah. All right. What about SoCal?
I still draw them. I just don't post them. So technically, you'll never know.
SoCal Crypto. Hello.
Hey, what's going on, guys? And to tell you guys the truth, first off, hey, everybody, I'm SoCal Crypto on Twitter. And I couldn't be more bullish right now. We got Sam on the show. We had Messiah's great William Wallace speech a minute ago. I'm pumped up. I mean, let's go. Let's do this.
Yep.
I'm famous for the William Wallace speech. I will give you that. I am a proficient hopium dealer.
Oh yeah, just one more hit, bro. Just
Yeah,
one more.
I got what you need. I got what you need. Meet me in the tunnel.
The first hit's always
Yeah.
free.
Yeah.
Sam, we're gonna need hopium features, please.
Right.
I'll work on it.
Yes.
They
Yes.
they only go up even when the index goes down.
Yeah.
Yes,
It's
perfect. That's the kind of market
inverse-
we like best.
Yeah, it's inversely correlated.
Who used to have those ride only markets? Was that Yobit?
Yeah. Yeah. Rights
Yeah.
only markets.
Yeah.
I saw that whale bot or whatever tweeted yesterday or whatever about someone buying $1 billion of up only perps or something like that. It was like, it was so funny, dude.
I think FTX already has hopium futures because it's finally got FTX, like FTT token perpetual. So
Yeah.
there you go.
Right. And then
Yeah.
and then we got Needlecoin. Last but not least, of course.
I'm just excited to be here. You know, I got Messiah here buying my bags, and then I got
shut up.
Sam who literally runs my bags. So I'm feeling very good right now.
You just kind
I'm
of
just
sit
gonna
back.
sit back comfortably.
Yeah.
Yes, we all
Let's
have to
go.
be really nice to Sam, otherwise he will nuke our net worths. That's the agreement we all signed before coming on the podcast.
Like
It's
I said,
this-
welcome to FTX talk.
Yeah. Right.
It's this Onion video where you got a bunch of political pundits talking, and they can all see in real time this like polling meter of which of them the audience likes best. And it's just like moving up and down, and you see their eyes like following it, and their speeches like changing in real time. Eventually, they find out that they just like saying the word PO box just makes everyone love them, and so the whole thing just devolves into all of the punches saying like, I just like PO boxes. I really love PO boxes. PO boxes are really. I mean, just like PO, and like all the ratings skyrocket.
This sounds like a terrible version of like machine learning.
Yeah.
More like Pavlovian response training.
Yep.
Yeah, pretty much.
Sweet.
Maybe
Excellent.
the feature set was biased. I don't know.
So what's going on, everybody? What we
All
got
right.
going on, dude?
Well, I have a question for Sam before we actually start off. When did you actually get involved with crypto
Yes.
and how?
That was a question I had too.
Yeah, totally. So it was 2017, like fall 2017. I was at Jane Street trading ETFs, and I really loved it there. And it's sort of like the weirdest part of the story almost is the beginning, because I just like had basically no complaints about Jane Street. It was like a great place. They treated me well. I really liked it there, and was like just sort of assuming that was going to be my career, and I was pretty happy and pretty excited with that. And I went to visit. It took, I guess, my first vacation in years there, and went to visit home and friends and sort of like long lost connections, and had my week of reckoning, and I basically sort of like took out a pen and paper and said like, all right, like it's time to sort of like have that biannual checkup where I sort of like think about what I should do with my life and if I'm doing the right thing, and and just sort of did it quantitatively that time, as opposed to what I'd usually done, which is sort of like qualitatively think about it and be like, oh, this is great, let's keep doing it. And thinking from the perspective of like, what can I do which will maximize the amount of impact that I can have sort of in expected value terms. I've written some threads on this, but I really, really deeply believe this, and think it's like incredibly important and central to how I decide what to do with my life, is that like, I think when you actually sort of get down to it, these sort of like positive tail cases are just incredibly large and incredibly central to the world. And, we just don't live in a bell curve world. We don't live in a world where most of the expected value of what happens is sort of like the everyday occurrences. And And we sort of know that on some sense, because when you think about the companies that have, that impact you, like everyone knows there's like 10 companies that have had like incredibly large world changing effects, and it's the same thing with people. And so anyway, I sort of sat down and I was like, what should I do with my life? And basically decided, like, look, there's like 10 or so things that I can think of that I don't know how they'll go, but maybe they'll be amazing. Probably not. But I can sort of tell the story where they are. And if they are, they could just be like so much bigger than sort of what I had been thinking. And that, it was either I was going to go for it or I wasn't. Like, either I was going to try them out and see what happened, or I was just going to say, fuck it, I'll keep doing what I'm doing. But there's no point in sort of like putzing around or delaying that. I was, only getting older and sort of, and the only way to really get information about them was to try it out. And basically just sort of like try to estimate, how big they could get, and sort of decided that was the biggest, that was where the big numbers were. That was sort of like the highest upside play. And so I left in fall 2017, and I flew out from New York to California, and I started exploring stuff and wasn't sure what I was going to do. I actually kind of started working with some charities, among other things, but also started exploring crypto. And it was just one of those things where I sort of like had this sort of thought in the back of my mind of like, there's sort of like lots of anecdotal evidence that crypto is like going bonkers, but I hadn't like thought about it super analytically, or I had but didn't trust my calculations. They're sort of too big, and so it's sort of like, yeah, I'm sure I'm fucking something up there. Like no chance it's gonna be that exciting. And then I just sort of like pulled up Bittrex and Poloniex then, and looked at the stellar markets, and they're trading like 8% apart, and they had like $300 million of volume on both sides that day. And it's like, I don't know, took the fucking selfies, got out my ID, created some accounts, and did the trade and like made 8% on it. And it's just there's this moment of like, holy shit, like that worked. Like, all right, there were two markets, there was an 8% arbitrage. I bought the lower one and sold the higher one, and I made 8% on that. And then I can go do that again. And it was sort of like almost immediate, like, oh god, this is actually pretty big, isn't it? And so I dove in and started trading, basically 24/7. And sort of like it quickly became clear that this wasn't going to be something I was doing from my laptop at work. Because it quickly became clear that while these trades were real, they were incredibly complex to execute for size. Because if you sort of teleport yourself back to 2017, this was a fucking shit show. I mean, it's like KYCing took months. Getting increased withdrawal limits was sort of this bespoke process that didn't really happen normally. Getting a bank account that could wire money to an exchange was like quite difficult. They'd all just shut you down. And you had to be multinational, and so like you start layering on so many things, even ignoring the technology side of this. And it's just like quickly becomes clear that like if you really want to scale this up from like the size of a person to the size of a company, you've got to go all in, and you've got to build out a whole crap ton of infrastructure. And so flew out some college friends and started up Alameda Research.
Damn. So Stellar is the one that got you, huh?
That was the first one. It was that first night. It's like 8 p.m. when I started. I think I like was trading till like noon the next day, and of course like after that, I mean, there's like 30 of them. That it's like late 2017, and just like half the altcoins were completely off the rails. I mean, it is like obviously inefficient. Like no one looked at the sort of like crypto rally of late 2017. It's like that's the efficient market hypothesis in action right there.
Yeah.
Yeah, I mean, we had even like futures premium going about like 30-40% on different coins at different times.
Yeah, it's insane, right? Sometimes you're like, here's a future, like a 3-month future trading at 30% premium. Like, if nothing else, like ignore everything else, you just sell that future and buy a spot and make 30% in 3 months. That's pretty good,
And the only risk for it is the infrastructure. Like, hope this exchange doesn't get fucking hacked or whatever.
Yeah.
Damn. That's a hell of a story.
Yeah. There's actually a time we ended up doing it, but early 2018, we like had some serious meetings where like, should we just take the richest future, buy a ton of spots, sell the future, park the collateral there, and then go like just build infrastructure for 3 months instead of trading? So we're just like already locked in our trade this quarter.
So
I mean, I've done some of that.
can you quantify how much this has smoothed out over the last 3 years?
Oh yeah, it's gotten so much. I mean, it's still inefficient, but it's so much less insane. And I think that like just to throw some numbers out, like the biggest best trade that you would find in like late 2017, early 2018, usually you're looking at about a 10% arbitrage that you could do on a scale of about a day if you had your shit together. That was sort of like the pinnacle. And 10% today, to be clear, is not a real, like, that's not a number that you see normally. Like that's sort of like outside the scope of like finance. For real size, you see it for $10, you don't see it for $1 billion, right? You can't prove that you can't see it, because if you could actually do that, make like 10% on $1 billion of capital a day for a year, right? Like you're just making like what was that, like $36 billion a year doing some dumb like some arbitrage. So and like no one makes that. So like this is just like a trade that was unheard of, and they just happened. Nowadays, like if you can find, if in a day you can find a trade that's good by like a few basis points, that's not bad. If you can find a trade that's good by 10 basis points, that's pretty cool. And sometimes when things blow out a lot, you'll get up to like 1/3% or maybe 0.5%. And that's like about as big as things get, except for like March 12th. So, I think it's a good factor of like 50 or so that spreads have come in, 50 to 100 since then.
Yeah, well, because you guys aren't the only kids on the block either. I mean, you've got a lot of competition. I mean, I manually try to do some of the stuff that you guys do poorly.
Exactly. And it's one of these things where
and there's people that also have the infrastructure that have that have firms that, like, you guys have a reason, had an incentive for going public and kind of saying like, hey, here we are, we're Alameda, because you're trying to build FTX and exchange and establish some credibility.
Yep.
But there's a lot of these people that nobody's ever fucking heard of because it doesn't do them any good to make themselves known.
Yeah, exactly. There's now 10 gigantic ARB firms globally, and then on top of that, as you said, there's like you guys, and it's like if there's a 1 basis point trade, like a click trader is not going to get it. It's like you're going to lose more on slippage than the trade. But if things widen out to a 3% good trade, this is like everyone can go click and do it. It's like way bigger than the slippage of like the 5 seconds that you spend executing a trade, and so it's sort of like puts a cap, realistically speaking, on like how big these spreads can get.
Yep. I'm wondering if that's going to impact, I think a lot of us, at least myself, are expecting kind of another 2017-esque sort of run, where things go fucking crazy, whether that be at the end of this year or maybe it takes another year or two, whatever. But I think I'm wondering how much of an impact sort of the level of, professional interest in people that, like you were talking about, have that infrastructure built out and have the tools and the systems to track, where these premia are, where these arbitrage opportunities are, what the speed of the change are at the moment to get shit between exchanges, have the bank account set up, all the stuff that goes into it. I'm wondering if that's going to sort of stifle some of the potential for another crazy 2017, just because, us dumb retail, we can't just push shit to crazy heights when you guys are going, that's just not right. We can make money off of it. You're being dumb. So
yeah, I totally see that. And I think that what you might see in sort of like the tail case where things get really wacky this time is the spreads only get 10% as big as they were last time, but for 10 times as much volume. And so I think that's the kind of thing you might see in these extreme cases where you still basically never see spreads bigger than 1%. But I mean, we've been trading, like the world's been trading $100 billion of volume a day pretty steadily this month. And that's not during insane movements, that's during big movements. It could get up to $1 trillion of volume in a day. So I think you're kind of going to see like, you might see the same amount of kind of capturable value just spread out over a lot more volume.
That bodes well for me. So I'll take it.
Outstanding. All right. Well,
they're just like, what are you guys talking about?
No. I was No, tracking. I was just saying thank you for answering in such great detail the questions that I had. Appreciate it. Dumb. If you want to start, if you've gotten a list together by now, I don't know.
There's more questions than actually like coins and stuff. Who are asking like what's on the roadmap for this year? People want to know like what your favorite cheese is. People want to know like. I mean, it's kind of a wacky group we've got here. So, I mean, what is?
Wait, Sam, are you vegan or vegetarian?
I am vegan, so the cheese one's not going to be a super interesting one.
Okay. Sorry, fan.
So, what's the best fake cheese?
What did you say? What's the best fake cheese?
Yes, fake cheese. Yeah, no, like so my mom went my breast cancer and she went through vegan cheeses. So I know that because I've bought them for her before. So
the vegan cheeses aren't great. There's like vegan burgers are pretty good right now. There's Beyond Burgers, Impossible Burgers. You know, they taste pretty good. They're like vegan chicken's not bad. Vegan cheese has a long way to go, I will say, until it reaches what non-vegan cheese is.
Fair. It's
a shame.
It's a shame. It'll happen, dude. Don't give up.
So vegan cheese futures?
Vegan cheese futures.
I'm just gonna say this is gonna be his next startup. We're gonna get news of Sam
see
acquiring like Beyond Cheese or whatever the fuck.
Yeah, we're gonna see some tweets. Cheese futures live now.
Alameda cheese futures.
Okay, dude. This can't be happening right now. Come on. We got him on for one episode, guys. Come on.
we have
I'm sorry. I promise I'll shut up. I'm sorry.
We have one of the most powerful guys in crypto on the show, and we're talking about cheese futures.
I think that means we're doing it right, honestly.
Yeah, probably.
Right? We are winning.
Yeah, I guess. Crypto Rogue asks, what's Sam's view on the regulations in the trading space for U.S. customers? Most people are locked out of a lot of the margin futures platforms.
Yeah, it sucks.
Save us, Sam.
Yeah, and I think this is a case where, like, I think there's just, like, clearly some work that needs to be done on these. And, you know, the good news that this isn't a case of the CFTC coming out and saying, like, you know, fuck these products, like, Americans can never touch crypto. You know, this is them basically saying, like, look, like, we're still working on a regulatory framework for this. The bad news is that means that, you know, huge chunk of the world's crypto enthusiasts are locked out of the bulk of the volume. And that's kind of sad. And I think that, like, you know, I think it's not something that needs to be the case. Like, you know, when you look at sort of some of the regulations that are coming out, you know, you can totally see where they're coming from, right? Like the sort of worries about AML KYC and, like, you know, making sure that crypto doesn't end up as a big revenue source for North Korea or something like that. You know, totally see the impetus for that. You know, the not trading crypto futures thing, I don't think that's sort of like the top priority from a, you know, making the world better standpoint. So I don't know. I think it's going to get better. I don't know if it's going to be on like a 3-month or 3-year time scale. And, you know, it's like clearly possible to get better because, for instance, like the CME has, you know, it has listed Bitcoin futures. Now, that's sort of as far as the States has gone so far. But it's not impossible. It's just, like, quite difficult. And, you know, I think that, like, it'll get better probably. But it's going to take some time.
Probably. Yeah.
And probably, right?
What do you
like,
think
maybe,
about...
Yeah, who knows?
What do you think about almost forced improvement by, you know, with all the stuff going on DeFi? We're seeing, you know, faster side chains, faster scaling, rollups, all these kind of things to enable faster and better dApps. And obviously, you know, with Solana and Serum, you're obviously right in the middle of that. But
yeah,
what I mean by kind of forced improvement is basically, you know, DeFi kind of has this ability that, you know, people talk about, but I don't think the average person really thinks about too much, that it's basically a giant fuck you to regulation. Like, you can't actually stop it. You know, what are you going to do? Outlaw holding, you know, owning a MetaMask wallet? You know, like how are you going to? So we're starting to get to the point where people are trying to build, you know, like levered and margin products on, like, purely on chain, relying on oracles and you know, price fee or stuff from Link to determine liquidation prices and all that stuff. Do you see that as a potential opportunity? Do you think that's actually going to be sophisticated enough or fast enough or, you know, work well enough in a secure way to kind of just say, you know, okay, we don't really care what the US says about, you know, what we are and aren't allowed to trade anymore because they can't stop it anyways? Or do you think that's still like a long time in the future?
So the technology is getting there, and this is sort of recent. This is not true a year and a half ago, but it is true now. And as you said, like, were sort of the core pieces of this? I think there's basically just been one sort of like core piece missing until recent, which is just a blockchain that's fast enough. And this is sort of, you know, it's not rocket science to analyze. You can sort of just like very straightforwardly see that, because, you know, how many trades per second does FTX, you know, have? I mean, I think we're talking like, you know, order of 1,000 during busy times, you know, thousands. And that's like one crypto exchange. And so you can sort of guess like how much throughput does a chain need to really support, you know, not just like technically you can build a dApp on it, but like that you can build the product you want and it's not like a giant downside that it's on chain. And it just like has to be tens of thousands of transactions a second at least, you know, that's sort of like the baseline. And then if you want to scale into the future, you know, you can sort of look at like how many tweets are there per second, how many trades does NYSE do per second, you know, Visa transactions a second. There's a lot of things you can look at, and you generally get hundreds of thousands, which means that you need to scale up to like 1 million transactions a second as a chain to be able to support like, you know, billion user time like kind of scale products. And that's just like those chains didn't exist 2 years ago. Now we're starting to see, I think Solana is, you know, probably the first one poking its head out in terms of ability to handle that sort of volume. So with that, you know, with that piece sort of checked off, the other, you know, the rest of it, it's all building and it's all doable. It's just like building good apps as opposed to like crappy, buggy apps. And so I think technologically, like, it sort of like has been unlocked, and now we're in the like, you know, actually build it phase, and it's happening. I mean, I think Serum's like, obviously I like it, but I do kind of legitimately think it's like the only DEX ever built that is, you know, it's the closest to a centralized exchange feeling in terms of usability and speed and things like that as a DEX has ever gone by a pretty large margin. And it's getting pretty close to that point. So I think these dApps will be there in the next year or so. And that doesn't answer the question though of like what their future is, because I think there's a lot of uncertainty there. And I think that like the thing that I strongly believe is that there's at least a decent chance that DeFi gets huge. Is that there's like, you know, if you say there's a 3% chance that DeFi ends up having like 1 billion users, like I'm gonna be like, no, it's way too low. 3%, like that's impossible. It's definitely more than that. But you know, I definitely wouldn't say it's 100%. I wouldn't say it's overwhelmingly likely. There's a lot of hurdles, you know, customer acquisition being a big piece of it, usability of apps, does it get traction, does the world decide it's lame in the end, or, you know, regulation. And I think that this is a sort of thing where the world's still trying to figure out how to regulate it, and there's a lot of shades of gray there. And how that comes down is also, frankly, going to have big impact on how that industry develops. And, you know, in sort of an extreme case, if governments decide like DeFi is just absolutely terrible and the #1 priority to stop, you know, Goldman's never going to use DeFi if that's what governments have said, right? And that really starts to sort of like, and obviously I said Goldman, but like it's true of a lot more than just Goldman. So I do think that regulation is still going to have impact on the adoption of DeFi, if nothing else.
Makes sense. Thanks for the answer, by the way.
Yeah.
So to touch on something a little more topical, how about the Stacked Invest acquisition of Alertotron?
Yeah, I mean, it's like obviously like we've really liked working with the Stacked guys, and they're great guys, and love seeing the product build out. And I think that like acquisitions are a thing that you're going to start to see happening more and more here in the space. Everyone's sort of talking about it behind the scenes. For people who don't know, like if you're sort of like working at a big crypto company right now, like definitely you have a division devoted to M&A right now. It'd be crazy not to. And the reason is like all of a sudden there's a ton of money and tension in the space, and people are sort of thinking hard about like where does my business fit best, and like does it fit best as a standalone product, or does it fit best as a piece of a larger whole? And it's different for different products, but for a number of them, I think people have sort of decided that 1 + 1 = 3. That like that, and I think a lot of the way to think about this is like you build a product and it's like kind of cool. No one will use it probably if you don't already have a lot of users, because there's a lot of kind of cool products out there. Probably a lot of similar kind of cool products. Why would anyone use yours? Why are they going to switch to it? There's sort of this like it's not just like maximizing how cool your product is. It's like it's sort of like coolness above replacement. Where replacement value is what people are kind of like using right now, and you have to get over that hurdle. And so I think a lot of people are thinking like, how do I get my business to that hurdle? And what does it take to sort of assemble the product suite that makes it compelling enough that people want to kind of like learn how to use it? And so I think this is like a really cool example of it. I think we're going to see a ton of this over the next year, like Stack tries to become a like go-to destination for people looking to have both manual and automated trading strategies and investment strategies without abstracting away the exchange layer. And as other business, and if you're a custodian right now in crypto, right, I think you're kind of thinking like, boy, like this is kind of a cool piece of the pie in a lot of products. Maybe I should go find my pie or build my pie.
Mm-hmm. Yeah, outstanding, awesome. I know another thing that another question we have for you is what is the FTX and let's call it the FTX ecosystem to include FTT, Sol, Serum, all those.
Yep.
What is their roadmap for what does the roadmap look like for 2021 for FTX and the FTX ecosystem?
Yeah, there's sort of some obvious answers here, which like I don't know, is FTX going to list some more features? Yeah, probably will. But thinking about sort of the further out there stuff, I think that there's like a few chunky things that we have on the horizon, and then another kind of collection of 10 chunky things competing to be the project after that. And that's generally how we act. Like we generally don't have firm roadmaps more than a month or two ahead of time, because the change, the space just changes so fast, right? I mean,
yeah,
in
you
spring
have to be maneuverable.
Yeah.
Correct, yeah.
Spring 2020, we were thinking about going all in on options and volatility product, and then DeFi happened. It's sort of like no one gives a shit about Bitcoin options, everyone cared about DeFi, and if we sort of stuck to that plan, like we would have been building the product no one wanted then, and missing out on what everyone was excited about. But now all of a sudden there's like a pivot back towards Bitcoin futures and options, and so one of the things which is sort of poking its head up on our sort of like 3-month roadmap is an options overhaul on FTX, and it's not yet clear what form that's going to take or if it will happen, but that's something that very well might. There's sort of a bunch of other projects that we're eyeing, and one of them is sort of building out the prediction market zone to become a more fully fledged product, as opposed to the sort of opportunistic version of it right now, where the Trump products obviously were extremely exciting, but there's often not a lot going on beyond that. It'll be interesting. We have Super Bowl contracts up, and it'll be pretty interesting to see what happens to those in a week. So I think that like that's that's sort of another area that we're sort of like looking towards. building out FTX US quite a bit is something which is probably going to happen. It's sort of over the hump of having been jump started. It's up to 100 million or so volume a day, and starting to onboard more and more customers, and so likely to have a pretty big build out there. The stock trading is something we're really excited about medium term, and we want to build more support for. And then there's some pretty chunky offerings coming up imminently, maybe over the next month or so. And the Maps.me launch is sort of one of the biggest ones. That's it's a mapping app, heavily European, which has something like 140 million downloads. And it's building a in-app payment system and investment wallet using Serum as the rails. And so that's something I'm super curious to see build out, because if it's sort of done quite well and really catches fire, and 140 million is like about as big as all of the people in crypto, and I mean it's like a few orders of magnitude above the DAU of DeFi right now. And so that's something that could really jumpstart this, and I'm super excited about. And then a bunch of other projects going alongside it in the Serum ecosystem. And then sort of one or two other pretty big releases, which we're looking at hopefully over the next, maybe even the next few days. I'm realistically speaking, probably more like a week. So I won't quite sort of blow the cover on, but but hoping that those will be turning on imminently.
Do it. We need a shitcoin talk release. We've never had anything exciting like that happen.
Right?
I had a question. Kind of like you were going with like how you were working on like the Bitcoin options and stuff like that, and like then DeFi happened, so you kind of like diverted to doing that. Something like when the bigger some of the exchanges were delisting like XMR and the privacy coins, and then the same day you listed them. Like, was that a coincidence, or or you just see the tweet, you're like, oh fuck, here we go, like let's do this, like how did?
Oh yeah, definitely not a coincidence.
Okay.
Alpha! Yes.
Okay. I was
Power move.
Yeah, that's
Yes.
that's really what I like
big
about
move.
like FTX and stuff, is you guys actually do like what is hot, so like I think that's really, because some other exchanges don't do that, so.
Yeah, and there's obviously always a ton going on and way too much to do, but we're pretty nimble and flexible, and so to the extent something pops up and like fuck everything else, like this is what matters right now, in a matter of minutes we can retool internally if we need to push something out.
Right.
Now, that was something I wanted to ask you about actually a little bit, was how, I mean, obviously I think like you guys are known, you guys being FTX and your team, how do you guys iterate so quickly on ideas? Because that's got to be more of a question of not like technologically. Also, obviously, you guys have devs and the tools you need to be able to build it. But what actually separates you guys from somebody like Binance or Coinbase or the other people who also have the potential to have the resources you guys do, and just don't iterate, don't bring stuff to market like with the rapid fire pace that you guys do? Like what's the difference? What makes you guys
Yeah. So I think that like obviously some things here are high level strategic decisions, and I think Coinbase is maybe a good example of that, where like say what you will about them, but and this is something I didn't think through very carefully until the last few months. They make a fuck ton of money, and the money they make has nothing to do with their products. Like it's kind of all their faults. It's not clear how much they matter, because like, do you guys know how Coinbase makes their money? It's like they have their mobile app, and it's just like they make 4% or something like that, insane on their trades on the mobile app. I don't know exactly what it is, but it's sort of like at least 1%, at most 10%, I don't know, somewhere in that range. And that's where a lot of their revenue comes from. And like if that's your model, it's sort of like a lot of other things don't really matter exactly. And on top of that, I mean, obviously they're eyeing going public, right? And I mean, if the FTX markets are any indication, looks like they make it like a 70 billion valuation there. And so I think you put yourself in their shoes and you're like, what should we do? Like iterate quickly and launch new cool products, or make sure we do absolutely nothing for 3 years straight so nothing can fuck up our IPO and mobile app. And there's like, I don't know. I think that like I wouldn't be shocked if there's just an executive decision made to go in that second direction, and it's like, okay, we could hire this person. Pretty sure they're gonna fuck up all of our internal systems, and no one's gonna be able to release anything. This is gonna gum everything up, but they're gonna look good for the IPO to have them on staff. Is that a good trade? I don't know, maybe, And I'm being sort of like a little bit cynical here, but I do think that like some version of that might just be like a rational decision for them.
It makes some of
Putting
sense,
that,
but how do you view Bittrex then? Because they don't iterate, they don't make new products, they don't release anything new and exciting, they don't list anything that's interesting, yet they don't also make any steps on the regulatory ladder, right? Like, are they just sleeping? Like, what's going on there? How do you view that exchange?
Right, totally. So what you do with the exchange that aren't, Coinbase, Binance, OKX, or Huobi, and I think that like, obviously there's different answers for different ones, but my best guess is that what you see in a lot of different exchanges is this sort of corporate malaise, which everyone is like, anyone who's worked at like a job that they hate is like intimately familiar with, where, it's just sort of like, you go to work each day and you don't really know what you're doing or why. Your boss doesn't really know what you're doing or why, or to tell you to do, but they got to tell you to do a lot of things and no one knows why they're telling you to do them. And it's like, the company has like 10,000 employees now, and it has the ability to manage 17 of them well. And the other 9,983 of them are sort of like afloat. And it just becomes like sort of a mess internally. And maybe it still has a money making engine. Like it's not necessarily to say that it's losing money, but it's very hard to steer a ship that has 10,000 people rowing in completely random directions with no ability to coordinate them. And I think that that's what you see at a lot of companies. And it's just like, when they were young, they were able to move quickly. By now, from some sort of like series of, decisions that whose sort of like outcomes no one quite predicted when they made them, it's just everything is gummed up internally. There's too many cooks in the kitchen and none of them have the authority to do anything. And you end up in this weird position where you've got like 180 developers and you can't launch a new market, even though it takes like about one developer to launch a new market. And you're like, well, you got 180 of them. Like, why aren't you launching 180 markets? And the answer is sort of the answer that you would guess if you think about like that corporate job you tried and hated, because it was like a complete like dystopian mess internally, where but you got 18 managers who need to sign off on it and none of them have any context on it or motivation for it to happen. And like, then sometimes some random political person internally gets like on their high horse about some random initiative and like everyone gets retooled to do that, even if it makes no sense. And then you're just sort of, that's how you are, and I'm sure that's not the answer for all of them, but we've seen that at a number of companies in this space. I think it's just true of a number of companies in general.
Okay, so corporate rigidity, but is that the path that FTX is gonna take over time? Like, how do you want to prevent it, or do you want to prevent it?
Right. I certainly hope we won't, and I think that like we'd lose a lot of what makes us special if that happened. And I can give you sort of some platitudes about it, right? About only hiring people we're excited about, and about hiring carefully, building out internal systems and structures carefully, having a flat internal culture. And I think those things really do help. I also think that it just means that like there's a limit to how quickly you can grow your staff. And we've been growing what we feel to be like insanely quickly in terms of manpower, And it means that after a few years, we have like 60, 70 people. And that feels like a lot to me, but I mean, some of our competitors have 2,000. And I think that sort of for now, and this is gonna have to be something that we're, adapting to over time. Now, but for now, I think my answer is just like, we're not going to be adding 1,000 people a year. We can't do that while keeping internal structures that we trust. And I mean, I was so fortunate that at Jane Street, where was before this, was really functional, had kind of great culture and cohesiveness and productivity, and was, I think it's probably about 1,000 people now. And how did they do it? Well, they'd been around for 20 years, and they'd been hiring very carefully and built up a really extensive hiring pipeline over those 20 years and had grown to 1,000 people. And so I think that, like, adding like 50 a year on average. And I think that, like, at that rate, you can do it. You can sort of scale up your workforce over time and maintain good structures. But you try and add those 1,000 people in 1 year, and there's just no chance that you're going to be able to, that you're going to have a management structure that doesn't suck. And the other thing I'd say, though, is that I think it's not the case that you can't scale up the product without scaling up the team. Obviously, we've built a lot with a pretty small team. And, I think there are just times where, like, yeah, one great developer is worth more than 180 uncoordinated ones. They actually just pump out more.
So one thing, like a lot of these exchanges, 2017, they just got a little hyper, and they wanted to add absolutely everything because it, is making money, right? And then when things started to fall apart, those coins weren't as relevant, and they were just offing those coins, which chased off a lot of their user base. Do you guys ever look at the delistings or some of the products you have now and wonder if they're worth staying around or if they'll be replaced?
Yeah, we do worry about it. Delistings are a really bad word in crypto, though. People don't like delistings, so we're pretty hesitant to do them. And one thing that I'll note is that it's a lot less scary to have futures than spot from this perspective, because futures aren't directional. You can go long or short, and so even if everyone thinks a coin is shit and going down, that doesn't mean our user base loses money because of the futures, right? Like, maybe they're short, and so, like, we're, from that perspective, in some senses, more careful about spot listings than future ones, because with spot products, we're sort of aware that, like, it's a lot more awkward to find ways to go short. It's sort of long biased, and we want to try and avoid making the spot market a cesspool of things crashing to zero. So there's just a lot more flexibility on the future side and a lot less impetus to actually delist them. We have thought about, just because of matching engine capacity, like, there's a limit to the number of markets we can have, and we're not there, but we couldn't 10x that number overnight. And at some point we might, and we have done that with some quarterly, like, often with perpetuals and quarterly futures on a product, and it's clear no one gives a shit about the quarterly future, like, no one has ever traded them. And so we'll just, like, stop listing the next quarterly futures, but keep the perpetuals, and no one really seems to mind that too much. So, we're probably gonna keep doing things like that too with the products that there's very little interest in.
You have like a couple coins obviously on the exchange that I really like, but quite low volume. But as long as they're moving forward product wise and stuff like that, you're not overly interested in removing them.
Totally. We don't feel like we have a sort of short trigger there, and if we feel like we have to be pretty motivated to delist coins, and I don't think we've ever delisted a spot token on FTX. So I don't see that being imminent, and I think it would have to be like a pretty compelling case to get there.
Cool. Next question is, how does it feel per week burning the FTT?
Yeah. No, it feels good. I mean, it's sort of like, we do a lot of work during the week, and sometimes you can see immediate outputs from it, but often you put in a bunch of work on something, and it's just sort of there, and you have no idea if it moves the needle at all. And it's really hard to tell. I mean, you do 100 things, and it's like shit happens. You don't know what did what, but it's sort of just a nice point each week to sort of reflect on, like, it sort of quantifies everything and makes it all material. Like, okay, this is like, this is this week's culmination of the years of work that we've put in.
Who gets to push the burn button? Is it you?
So I push the button to start the buying, and then Nishad pushes the button to do the burn.
Whoa.
That must be a great feeling.
Cool.
Who would have thought a couple of years ago you'd just be thrown away? For those that don't know,
right?
They burn millions of dollars per week and pretty consistently. So must be pretty exciting. It's got to be a thrill.
Yeah, I very much.
But that's part of what
that.
gives the token value too.
Yeah.
So now, speaking of delistings and whatnot, well, going the opposite of that, speaking of listings, what is exactly what is your guys' process for assessing a coin to list either on spot or futures? Like, what exactly, what makes you guys finally decide to say, hey, we're putting it on?
Yeah, so for futures, it's just excitement. And it's sort of like even direction doesn't matter that much. Because again, you can go long or short. And so, because of that, we don't feel bound to, like, if everyone is just confident something's going to crash, that's a great time to list futures on it. And so I think that, like, with futures, basically we're just looking at a combination of, like, this is like too crude, but like basically some combination of like volume traded and tweets about it, right? And it's not literally just tweets. I'm looking at WeChat posts too, and DMs and everything. But like, how much excitement is there, and how much volume do you think it'll bring? How many customers do you think it'll bring? How topical is it? For spot markets is a bit different because, and two reasons. First of all, the directional bias means that we're like quite nervous about listing coins which are low profile and shitty. We don't want to become known as the exchange and just lists a bunch of shit that tanks. And then sort of beyond that, obviously we look at volume, at excitement, at things like that. We also just take a much harder look at the development roadmap of the project. And you never know what's going to happen with the coin. Some are going to do well, some won't. But, if it's a big name coin, whatever. But if it's sort of like a small coin, we often take a pretty close look at, like, is there a real reason to be, excited about the future of this project, and to think that there's real upside there.
Hell yeah.
Awesome. Thank you.
Have you guys ever lost money from a listing? As in, I mean, I know there's like associated costs, and I don't know how this works with you guys, but obviously I know Alameda and FTX are two technically separate different things. But I know like Alameda does a lot of the liquidity provision, especially on new markets. Right. Has either side, has there been a net money loss from either Alameda or from FTX, whichever one ends up footing the bill? From having listed a market that you thought there was going to be a lot of interest in, but then there wasn't, and you still had to, maintain it? Or does it usually end up just being like, hey, we're putting in a lot of effort, we're not really making anything, but we're also not losing, we're just kind of losing time and effort, maintaining this market?
The biggest cost by far is time. When we think about the cost of, and the biggest thing here is when we think about integrating a new blockchain into FTX, that's a huge cost, because that's a tech project, and it's one we have to build out and maintain forever. And we have to run a node on, and if that node goes down, then customers get angry, because deposits and withdrawals don't work. And so, that's one of these things where, like, we assign a very high sort of equivalent, cost to listing a new blockchain, but it's not literally money we're losing. It's just opportunity cost. It's doing that instead of spending that developer effort somewhere else. So that's just by far the biggest thing. And from Alameda's side, like, certainly, like, sometimes get sort of groans in response to, like, requests to provide liquidity on some piece of shit, right? And they're sort of like, come on, Sam, like, this is not worth our time. But so be it. And so I think from that perspective too, the biggest thing is basically like, it's Alameda has put a shit ton of time into providing on FTX, and a lot of that's on these long tail markets where, you look at some illiquid coins quarterly futures, and not just that, but people are not happy if there's any downtime or any complete lack of liquidity time. So it means that, like, building a system that will be 24/7 without interruption, even when shit's going crazy and their tech problems, have solid liquidity out on an extremely illiquid coin 6-month out futures contract is a hard problem. Like, it's a hard problem to build something that's super robust in a market that's not robust. And it just takes a lot of time. And so by far the biggest cost here all around is just effort and time spent on products and whether they sort of justify that.
Are you guys backed up at all for people verifying and stuff like that, or?
We are a bit backed up. We're a few days backed up. It's hopefully getting much better now. So over the last week, we've rolled out a ton of updates to our KYC infrastructure, which among other things mean that you can now get verified in minutes if you aren't an idiot. Now, it's still the case that the majority of people are
man. That's
it is, and the majority of people are not getting verified in minutes still. We're working on it. And just to give you a sense of why, it's a very, very long laundry list of reasons. But a typical one is like, we have a field for name, and someone will write in Jim. And we're sort of like, your name's like you almost certainly have a last name. Like, we're pretty sure Jim isn't your full name. But I don't know, yeah, if that's what you put for your name, you're, you know, it's gonna have to be some enhanced review on your case. There's probably gonna be some follow-ups, you know, by email where we ask you to please tell us your actual full name. The same thing, like, we'll ask people their address, and they'll just put sort of like, you know, like, I don't know, like Petunia Street. And we'll kind of be like, I don't know, like, at least try, you know, like I understand some streets don't have numbers. Street address are actually a mess because different countries do different things, but no, everyone has more than like one word. Like, one word is definitely not an address. And so anyway, it's like, you know, a lot of the backup is from people who sort of like obviously didn't really try with their KYC, and then we have to follow up on those. The other cases are cases where, you know, I don't know, there's sort of like lots of you know, databases and systems that we access for this, and sometimes there's just ambiguity in those that we have to resolve manually. And so you know, we're trying to get it as automated as possible and as fluid as possible. There is still a backup. We're churning through it, but if you're careful with your KYC, there's a pretty decent chance that you can slide through that.
So don't be an idiot. Just try
Yeah.
your best, dude.
Yeah, if you're like,
I'm sorry,
looking at the KYC,
I literally just quoted you on Twitter saying that for right now because I thought that was fucking
I mean,
hilarious.
if they can't do their KYC, I wonder how their trading is going. But who knows, dude? Who am I to judge, dude?
Well, I mean,
Yep.
apparently, like, FTX has the lowest liquidation rate compared to like the volume or whatever, which is impressive.
Yeah.
Well, I have
So-
noticed that as well. That there's a lot less liquidations from FTX than from other exchanges that offer leverage.
Why is that?
Yeah, I mean, I don't know exactly. I have some theories. So one piece of this is that when there are liquidations on FTX, we generally put a pretty decent amount of work into trying to make them minimize impact. And, you know, it's less likely to get the cascading liquidations that you sometimes see on other markets. More likely to be handled in an orderly way. And so I think that's one piece of it. But I think another piece of it is just the user base. Like, it's sort of like FTX's original core user base was both more sort of like sophisticated and less likely to accidentally get liquidated than other exchanges, and also less, I mean, there's sort of the ethos of the BitMEX trader, and it was very much in line with the image that Arthur projected, and you know, the marketing of the exchange, which is like, you know, 100x, right? Like, and yeah, if that's sort of the use of the exchange, you have a ton of liquidations. And I think that, like, in general, if you kind of look at like the average type of client that FTX attracts, you know, they tend to prefer not to get liquidated. And I think that's like actually a real piece of it. You know, maybe it has something to do with the systems and, you know, the displays. Maybe it makes it easier to manage your risk. I do think that's a piece of it, that, you know, there's on some of these exchanges like 300 accounts you have to manage. like 300 different wallets within the same exchange for every different margin pair, and there's just like no chance you're going to be on top of all of them. You're definitely going to get liquidated on some of them if you're not careful, because like literally like is like you can't click fast enough to move the capital around. Whereas on FTX, everything is cross margin. You can do it all in one wallet if you want, or sort of subdivide however makes sense to you in terms of sub accounts. And so I think that also makes it easier to manage margin and prevent liquidations. But my guess is that the typical client base is probably the biggest piece of that.
Word. A few people asked, however, like user signups in the last few months. Like, have you seen like a pretty big increase in user signups? I would
yeah,
assume.
We've definitely seen a big increase in user signups. It's been like clearly picking up. It hasn't been increasing as quickly as volume is. Definitely like per user volume is up a ton. And so, I think that we've had like a 8x increase in volume and like a 2 or 3x increase in user signups. I'm sort of ballparking those numbers.
Burn, baby, burn.
Burn.
Now, are you measuring Are you measuring volume in USD or in contracts traded? Because
in USD,
some of that might be explained by the fact that just everything's worth 3 times more than USD than it was 4 months
absolutely.
ago. So.
And I think if you look at like FTX's growth over the last 2 months, I think like a factor of 3 comes from price increases, and a factor of 3 comes from FTX's sort of growth as a product and ecosystem.
Cool. More people to trade against me. I like it.
Yeah.
All right. We have any last questions? We're about at an hour, so I mean, if anybody's
I've actually got a few questions.
Okay.
We talked a lot about a lot of good things, but we haven't talked about anything pertaining to. I'd really like to hear Sam's view on where we are in this current market cycle.
Yeah.
How long he thinks this market cycle, could persist for. And also just the trend in this market cycle. In the past, we had this rotation between Bitcoin and alts, Ethereum being among those alts. Or have we added DeFi into this rotation, or is DeFi still, Bitcoin and then alts? Or is the money going to go Bitcoin, DeFi, Ethereum, Bitcoin, Ethereum, DeFi? Like how do you see this game of ping pong playing out?
I think first answering the second question, I do think we've probably added DeFi into that cycle. I think it's at least for crypto native users, I think it's probably here to stay, as sort of an important subset. In terms of where we are in the cycle, it sort of seems, and I don't know, not investment advice. My like weak guess is that we've gotten to about where we're going to get based on what's happened so far. That you started to see institutions dipping their toes in crypto, and there's sort of a pretty big boom from that. And then there's a question of is that or is it going to keep going? And I think that like a lot of what's going to determine that is sort of the growth of the space done, or is it going to keep going? Like we've sort of like exhausted the oomph you can get from like crypto adjacent business announces that they're considering maybe something Bitcoin something. But I mean, if a bunch more jump into crypto, or if a bunch of businesses that have nothing to do with crypto but are huge start to dip their toes in the water, I think that would still be big. And I think that that's sort of what could propel it, again, and sort of to the next level. And so, when you start seeing major banks talking about actually releasing crypto products, or when you start to see more payment type facilities, like PayPal did, actually going in and adding crypto, I think that's sort of the point at which you might sort of like get that next jump. So
would you go as far as saying that like our current environment, what we're seeing right now isn't necessarily, as opposed to 2017, the byproduct of this mania? Is it more a byproduct of actual industry growth? That's just something I'm not used to seeing in crypto at all. We all know we have these like giant boom and bust cycles, and it's really just driven by greed. But when I'm looking at Bitcoin at $40,000, $30,000 even, and then I look at the growth of the DeFi space, are we growing in accordance, or is price growing in accordance with actual growth this time to a greater extent than it has in the past? And if it is, like, could there be interesting implications beyond that? For the first time ever, could some of these crypto assets actually be looked at as maybe investments, rather than just market cycles to ride? And of course, everything will cycle. I'm not saying it won't, but is crypto investable now?
Right. I think it's moved more in that direction, and I mean, I think it's like some in between cases, right? Like, what does it mean for the crypto ecosystem to have grown? Does more people buying Bitcoin, is that what does it? And I think the answer is, I don't know, sort of, right? Like that is a piece of it. I would love to see more crypto-based payments. I'd love to see more backing of other assets with crypto. Like, I'd love to see sort of more businesses become integrated with crypto, as opposed to it just being like, another more institutional set of people buying Bitcoin because they think the price is going to go up. But I do think that still counts as progress and growth. I think in DeFi, again, it's sort of like been big progress in terms of people actually building a ton of products and releasing shit. Now, I think that most of those are sort of not production ready in terms of being able to scale and really grow the ecosystem. But it's certainly better than like just sort of repeating the word, DeFi over and over again in relation to a product, and maybe you'll have some coin released in 3 years and you'll get around to sort of like an app sometime, maybe. So I do think that we've taken positive steps in that direction, but I don't think that we've sort of like fully transitioned from like, promise and vaporware to rock solid revenue generating businesses in some of these cases. Yeah.
Hell yeah.
Would you say you're all in, Sam? Are you majority crypto, or?
I mean, it's like in the way that matters, absolutely. In that, like, and this is something I've spent a lot of time thinking about. How long crypto am I? And the real answer is extremely long, because it sort of doesn't even matter, like, what's my PA or anything like that. Like, FTX grows and shrinks with crypto to some extent, and if crypto booms, so does FTX. And so I think that, like, the actual coin positions are, in the long run, just not that important compared to the impact of industry growth on the business.
I had one final question from the troll box. Someone mentioned, will you guys make an undo button for some of our trades?
Only the good ones.
Oh, fuck, dude.
Yeah.
No.
That's dirty.
Okay, that
All right,
backfired.
I hate whoever asked that.
Yeah,
Fuck that guy.
backfired, dude. Oh, shit.
Yep.
All right, man. Well, yeah, we're about ready to wrap it up here. I mean, if there's any last words, if you guys have.
If you had to pick one, Sam, one, FTT, SRM, SOL, what is it?
Well. According to Sam's own logic, SOL probably has the biggest potential to fully realize if it managed to do so. Just from what I can think.
That answer. I like that, man.
Love it. Thanks,
Yes.
Well, yeah, it's been good having you on, man. I appreciate all answering all the questions and stuff, man. And
thanks for having me.
Thanks for your time, Sam. Really appreciate it.
This actually went pretty smoothly, except for the cheese part. The cheese part was a little weird. I don't know why we're talking about cheese, but
we went a little off
Everyone has
the
their
rails,
low
but it
points.
wouldn't be shitcoin talk.
We just got to get to know you a little bit, I guess, right? So
Look, man, it's an icebreaker. We're just trying to get everybody, having a good time. I don't actually have a reason for it. I'm just an idiot.
Perfect. All right, well, that about wraps up. Messiah, do you have any last words?
As always, and in classic shitcoin talk fashion, my last words would be to buy my bags.
Okay, that's it, man. Okay.
Hell yeah.
Episode
Couldn't
88,
agree more.
That's it. Thanks for everyone. Like and subscribe. That's it. That's all I got to say.
Yes.
Okay.
Peace.
Goodbye, everybody. Thanks for watching.
Later.
See you
Love
guys.
you.